Hey, hey, hey. What is up, everybody? It is Steve, and we are going to be doing some trade overviews today, going over what I did this week, what I'm looking for next week, and yeah, getting into the nitty gritty of what we saw in price action this week, because there's a lot to talk about. So we're going to hop right on into the charts here, get going. And there we are. So, first, we're going to start on the hourly here, because I think there's a good amount to talk about. Get this a little wider for y'all. So, you might see one line in particular on my screen here, and I think it's a pretty important one. We got the downtrend line break. Pretty big, pretty big. We will go over what this means for the market very shortly here. And I think actually we're going to start all the way out. We're going to start on the daily. You know what? Let's do it right. Let's start all the way out, guys. All right, we're gonna do a full analysis of SPY here for you. What's up, Tyler? Good to see you in here, brother. It has been a wild week, huh? Wild month. I think it's really, really important to start on this monthly candle because look at where we closed. Beautiful hammer candle. Beautiful hammer candle there on the monthly. We can check out Qs as well. Basically, what we saw is a big old save stick in the market. Everybody got real scared. This one's a little less pretty, but it still is right up there in a beautiful hammer category. So we really do have the potential to get that end of the year move, that Santa rally, that push to 7,000 SPX. And I think it's coming next week here. I think we got the base in. I think our bottom is in. And I think we have a lot of good tailwinds going forward into the next year. So let's start at the weekly here now on Qs. We have a really nice flag break forming. Something like that. Doesn't have to be perfect, but it gives you the idea, right? That looks good. So in general, we had consolidation. 1, 2, 3, 4, 5 weeks of consolidation, including this really ugly weekly close, which we then traded an inside bar in and pushed out. After that, we've seen the 3 weeks of up countered by 3 weeks of down, right back into the same base. And we are basically retesting this breakout area. So when we see this kind of reaction, breaking a downtrend line, breaking a 3-week consolidation, reclaiming key moving averages as well. Qs are now over all of their essential moving averages. And we are starting to look like we're ready to rebase and push up. So we can talk about what this might look like because there are a few different plans or a few different paths that I think we could take here. But right now, I just want to acknowledge the similarities here from the last time we broke out of a very similar pattern. And here's the craziest part. On Qs, it's actually the exact same level. So some of you might already see what I'm talking about, but it's really about this major red candle that kind of broke this chart and needed to make us rebase. So the big thing is when you get an outsized candle like this, you really want to mark the range and you want to play the breaks of these ranges. This is the same if you have a really important high volume day. Maybe it is a data print day, especially FOMCs. They really love to post a candle like this. And the real move comes from breaking out of this zone. So if you see over here, as soon as this candle printed, I know I was looking at the similarities here and I saw a lot of other people doing it too. You know, it's not rocket science. It's more like when you have a really big candle like this, you just got to watch the range and see what it does. And so this was a very scary day because it looked like the gates of hell were going to open and we might have to come all the way back and visit this area. Because when we had this base here and we were trading above it and then the bottom fell out, we had to revisit the bottom of this basing area. So if this bottom gave out here, then we would likely have to revisit down here. So when we posted this stick, this is when I got very bullish. And especially when we gapped up, I was a buyer at open on a lot of things on this day. Anything that I was too scared to buy here. And the thesis was we have this range and we swept the bottom and then we posted a sign of strength here. And if we zoom out just a little more, we can see that it's probably because it interacted with this zone. Let me show you what I mean. So whenever you have a top of a range, so this was a breakout or a consolidation range that eventually broke out. So you always watch where the first swing high was, and then where sellers first started stepping in. And then when they broke above that, it was off to the races and never looked back, right? So we are essentially coming all the way back and just retesting this breakout here. That's a pretty significant breakout because it was a full month of consolidation here in August. So now that we've back tested that, we found buyers, and now we were watching for the break of this because we are expecting a break of this. We are expecting it because we are bullish overall. This is an incredibly bullish time of the year seasonality wise, and we just got a really nice 5% shakeout. So between all of these factors, it really was aligning for a fat pitch long. And so that was mostly what me and the guys on my server were doing this week, just getting long, buying dips intraday as well. So we were buyers in this wick as well, even buyers in this wick, because this is a very strong move. We also closed incredibly strongly today. We'll talk about that as well because that end of day candle really saved my butt. We'll talk about that. But in general, I just need, it's just really important to acknowledge that we have this very, very clear neckline level here. We'll even draw a rectangle to make it clearer. And we just reclaimed it. So last time we got this very similar look, this gap up, closed strong. And then the next day was just a massive gap up. And I think this is a possibility next week. We might see a big old gap up, and we would be targeting this little imbalance, this little zone here where no shares were traded in cash session. See right there? So that gap, imbalance, whatever you'd like to call it, is the very clear, in my mind, target for bullish progression. So this is going to be a big shelf, and there's a lot of stops, a lot of bear stops, put stops, short stops right over here that would be really like to be swept out. And then likely there's going to be some pushback. And what we might see is an inverted head and shoulders, where this is the left shoulder here. We have the head, and we could get a right shoulder like that, which we could even look at as a back test of this breakout or of this breakout level. So I would expect some test up here. Maybe they just test and fill this imbalance just a little more green. I think they probably are going to want to sweep up here, 625. And then we can look for some pressure release. But in general, today I was trimming. Essentially, I think the bottom is in. I think some of my buys, anything on this day and most of my stuff from this day is probably safe on monthly to 3 month out expiries like I bought. But anything I kind of chased up here that's green, I wanted to make sure that I'm kind of not overstepping. So for example, Rivian was one of those names. And whenever I feel like I'm playing a momentum trade and I didn't get in perfectly, I got in on this day. I did not get in down here when I would have liked to. So because of that, when we filled this gap, I took profits. I did not have any position when it gapped up super strong. When it came back to 1630, I believe. Yeah, 1630 was the level where I had sold on this day. I know I said I sold at the 1620, but on the overnight chart, there was a little bit of the full gap was basically up to 1632, I believe. So when it came back there and started finding buyers, I started getting involved again, but I've got a tight leash on these. So here's another area where we had this swing high. We surged above it, gapped below it, and now we're surging back above it. I'd like a little back test here at some point to get involved again or to add in again. But this might be a situation where the runner's just going to run. So how I played it is, at 15-ish or so, I think I bought a little like 1520 or something. I probably bought when I broke this high a day. Can't really remember, but that looks right. Then we took the clean move here for a nice 110% or something. And then I just used the winnings to roll up and buy another contract today. So I'm not really worried about it either way. And I think this is a good way to play these momentum rallies like we're seeing right now, because nobody knows how high it's going to go. It can just keep going until we, you know, find sellers, like meaningful sellers. So because of this, we got to have some skin in the game. So you can do that with options. You can also do it with your trade the pool account, of course. So you can just, if say you had a big win yesterday and you cashed out, okay, well now you have a nice cushion to continue the trade the next day. Keep it on your radar, see what levels are interacting with that it, was resistance yesterday maybe, and now is flipping to support, and you can get back in and keep riding these swing trades. And, if you have a swing account, you can just straight swing it. And if you have a other account, you can swing, I believe it is 15% of your account. So you can still get some really nice moves with these, and you can kind of just keep doing continuation plays. So another one, I actually didn't take these contracts. I sure wish I did, but I called these out that the February 40 strike contracts were getting a ton of pressure, a ton of heat, buying pressure there, and it created a very large gamma node. We'll draw that out as well. And the gamma node is created by all of those options, basically creating a magnet up to 40. And we actually smashed through it. So I was watching Trader TV Live at the close, and they were going over their MOC, market on close, their scanners. And one that stood out to them was Intel was getting big buys on their market on close order, despite being up massively. They were expecting some sell back or, sell off, which I would totally understand. That being said, crazy move, and this strength means that it's very likely to want to go back to all-time highs and higher. So we still love Intel, but it's hard to chase here. I'd like to see a flag develop. If you did take those February 40s, call them out on this day here, man, those cooked. So in general, we are seeing a lot of stocks that could push really nicely. We can talk about a few more of them. What else am I in? Silver's doing amazingly, potentially squeezing. Look at that. Holy moly. So I sold most of my position here. Sure, wish I had more. I just have shares now. I had leveraged options that I just took because they were up a lot. Bought them in here. Definitely wish I held and bought more time. I'm going to be looking for a place to re-enter, probably this 50 handle. If we get a back test this week, I'd love to see a flag here. It might just straight squeeze though. So if it does just straight squeeze, what I might look to do is play gold. So gold is lagging, but it did just confirm a really beautiful breakout here. So again, I'd love to see a back test of this 385 maybe, but realistically, these might just keep going. So these are going to be on my momentum list that I'm going to be playing intraday at the very least. And again, it'll be the same thing as that Rivian, where if I think I have a nice move here, like I think gold has a straight shot to this 394. So I'm going to be a buyer of probably weekly options on dips, maybe a monthly option. But I like the weeklies because if I get the straight shot move, then I can basically take 100+% off of that $7, $8, $6 move on gold. And then I can use that to fund an extension play and keep rolling up and rolling up. And like I said, you don't have to do this with options. You can do the same idea of the play with just, some decent leverage on your shares. And you can just say, all right, maybe you can do a 2x ETF as well. Then you just have your target, you take it off of the target, and then any pullback, you can add a chunk of that in. Or you can just keep a chunk of it on, of course, as well, just a straight runner. But either way, the idea is to manage the position in such a way that you strike when the iron is hot with good size if you think it's a very high probability play. And then when you book that, you can let the play keep running by using the money that you made as a cushion. So yeah, we really like gold here. Really like silver, of course, as well. Definitely think these are going to be big movers into the next year as well. A lot of people don't believe that these can keep going. I think that they are wrong. Interestingly enough, we can look at IBIT too. We're seeing major relative weakness in crypto to gold. And I believe this is another trend that will be quite long term. We're just starting to see this trend. So keep this in mind. It's not that I don't like Bitcoin at all. It's just that I don't think it's going to outperform gold as an asset in the next couple of years. So moving on from there, let's talk about a few of the mega caps that I like. And then we're also going to bounce back into today's price action, the intraday stuff. But Amazon is another swing that I'm in. I like this one a lot. And essentially, you can't see it on here, but the 200-day is right at here, just about 228, 227.50. So if we do get a pullback next week, I'm going to be adding to my position. I got into my position about 2 days ago, and it's just maybe 5-10% green right now. Not big green. Didn't get the perfect fill. It was a January 6th 250 call. I was following flow on those, and the chart looked good. But in general, what I'm seeing is a really pretty chart if you just ignore this gap up and rejection. Besides that, looking pretty darn good. So we're going to do a little bit of easy TA here. So when I draw trend lines, I try to look for the most touches. I just did this instinctively from the high to the high because I just kind of wanted to see. But what I think is more valid, to wiggle this on down just like that. So now I have this touch, that's a touch, overshoot and rejection, that's a touch. This is pretty darn close to a touch before it gaps up. And we have the back test here as well. So I'm not a huge downtrend line guy. I like horizontal levels a lot more because that volume sticks better, that price memory sticks better. But when I see this, I think that this is basically a cup and handle that's back testing. Do I have a cup? No cup line. Well, regardless, you guys see it. Rounded here, and then trading sideways, holding the top. This is going to be about the 6.2 fib of this range to this range. So it's very tight. In here, it tried to break out, failed, but it held this low, formed a higher low. And we can add one more trend line there. Just to illustrate that we do have a consolidation pattern here. It's a little sloppy. This one did sweep this out, but in general, most of the volume on this pullback here was traded into the trend line there and on the reclaim and the push up, and then a little test there. So consolidating pattern here, price is tightening up in the top half of this range. And there's also a channel. Let's see, where's the channel? That looks good. So I drew this channel here because we have this touch, 2, 3, 4. That's enough for me to draw this trend line here, regardless. We get the nice washout, and then after it reclaims, that's when it breaks much higher. And down here, it didn't quite get down. Maybe we can adjust this just a hair. That looks a little better, actually. Let me nudge this down there. All right, I like this more. And then I'll pull this down. Roughly like that. And so in general, sometimes it lines up where it's just perfect touches like this. Sometimes it's more like this. In general, this is close enough for government work. There's an up line here of some type, which is clearly finding buyers. Here we lost it, but see it consolidating. I'll zoom in. Consolidating into that trend line before the gap up, then back test once, back test twice. I think this has a lot of constructive price action, and it's been really frustrating for shareholders. So that's just another sign where it might be ready to make its move. And if you look at other ones, other mega caps, which historically had been very frustrating for shareholders, namely GOOG, the GOOG, good old Google here. So this one was very frustrating to hold down here and down here while all the other mega caps were trading at highs. But as you can see, major catch up. I'm not saying that Amazon does this, but hey, you never know. Why I say that also is because this is why we were getting so heavily involved in Google so early after the tariff news. We were in at 160. So we gave it 1 week, bought in one of these 2 weeks here. Got chopped a little bit for like a month for the big lift off. But why we were in here is because it was a back test of a cup and handle. I'll draw that out as well. So just going to draw a rough zone where we started seeing resistance. Started seeing red candles there, up to there. See how that works? So grinding up, big surge, found a seller. Popped higher, but then found a seller. Tried to pop higher, found a seller, tried one more, and defined this box, this top of this range, as a sell zone. And this, again, back in the sell zone, puked it. So we reclaimed it. We've created a cup or a mitigation block. So anybody who was long here, who wanted to get out break even, they got a chance. They are scared. They sold their shares to people who have been buying down here, averaging up. They have conviction, or they're selling to new people who say, hey, this is going to be a cup and handle breakout. So there are people who want to get out here, but there are more people who want to get in. That's what we saw in this part here. And then the surge higher, back tested, clear support, pushed higher, back tested, clear support. Then we saw this cupping action forming here too. You can call it a cup. You can also call it a W pattern. Either way, the target is to sweep this and go higher. Yeah, cup and handle, exactly. Yeah, really clean Bulkowski type pattern there. So Joe's mentioning Bulkowski, who is the patron saint of pattern trading. Everybody should check out his book if you haven't, and maybe check out my webinar. You can check that out just by searching Trade the Pool Bulkowski pattern or Bulkowski. And yeah, I did a big webinar on that. Google might have been one of those charts in there, actually, now that I think about it. But yeah, when you get a really big fat pitch like this on a super high quality company, I didn't even bother with other mega caps. I just loaded the boat with GOOG at 160 and didn't look for a couple months, and then trimmed a tiny bit at 208, but the target was always 300. So I held a whole bunch until 300. Yeah, absolutely. Happy holidays. And I'd be more than happy to look at GM and AMD for sure. Soon as I finish with Amazon here, we'll do those. I think AMD is going to be really good to look at anyway, so that's perfect. So yeah, Amazon here still holding the bottom of the channel, compressing here after this fake breakout. I believe we get another push up. I think the next area of interest is going to be the big gamma level at 245 to 250. We can draw that as well. Always like drawing those gamma levels so that when they come up on my chart, I'm ready if the sellers are there. Maybe something like this. So I'm drawing the zone from the top of these wicks to the 250 strike that's a magnet. And I'd like to see move up here where I would take my call off, hopefully in the money, and then maybe roll up to a 260 call for a month out, something like that. If we do get a pullback to 227 to 228, which would be a back test of the 200-day moving average, I would be adding off the bottom of this channel, and I would be stopping out if it lost this low, but I don't think it will. Anyways, yeah, Amazon looking really good. Let's look at some of the other big boys. AMD is pretty big, getting bigger. Beautiful. Let's talk about what's going on here. So whenever you have a blue skies breakout, this was to all-time highs on AMD. Usually what you see is one of a couple things. You could see a straight rejection. Tries to push up, slams down, back into the gap, trades in the gap. The gap becomes resistance. This gap up becomes resistance, fills the gap, can't find significant buyers, then eventually would have to make a move down. That is one option. The other option, which is more common on these very strong gap ups into blue skies, is that it reforms a new basing, or restarts a new basing process up in this new range in blue skies. So essentially it's just price discovery mode, found sellers, the market's weak, but this is still holding much better than the market as a whole. Well, I mean, is it? I guess it's a big momentum play that went down to 200 from 266. That's a big haircut. Don't get me wrong. But I mean, pick a momentum stock. They got bodied in this period. So relative, I'm going to call it relative strength, especially considering semiconductors in general were definitely not holding a gap up. So in general, what I think we're seeing is a basing process here. We see the push up in the sell. So I think that this new pattern that we're seeing is starting from this sell. What I would expect is that a new basing process would look like push down, intermediate push up, push down, sweep that high, the intermediate high, higher high, sweep this high, then break out. So if we do see something like that, you don't have to rush and get involved in this quite yet. You can, but although at this point, this is not even overextended. So it's just breaking the W. No, I talked about the W on the weekly that we'd like to see. So down, up, higher low, new high. That's what we'd like to see. But if you look at the daily here, you're also seeing a W here forming. One, middle part, second bottom. Now it's just breaking the neckline. So the target should be up here for AMD. I would be targeting, it's going to want to sweep this, because if it can sweep the top of this big red candle, then we're off into blue skies and we'll see new all-time highs quite quickly, relatively quickly at least. This is an area where they could defend it though, because of this, and because there's also a very important strike that's in the top quartile of this candle, this important candle, this 230 strike. I believe that 230 will be the target next week. So if you are a AMD bull, we can definitely consider that to be the target. We can draw that out. Yeah, and that looks like a good zone to me. So 227.50 to 230, you can look for sellers in there. And if you see a pullback and then strong buyers, you can then target for the full sweep up here. And then you'll probably get up into this imbalance and continue to grind its way higher. I would not short this. Don't think you were going to, but just saying. I do not think it's going to fill the gap anytime soon. And there's another little bullish sign too. Just a really clean downtrend line break. And again, we love these 50% angles, anywhere between 40 and 60. We consider a very even, neat, kind of controlled demolition downtrend line where we're falling, but we're doing it in a very uniform way. And then we break and boom. So I like this with the double bottom here, dipping back into the gap. There's another thing to draw out there. There's your gap. And if you were an AMD bull, this was the area you should have been watching. Not that it's too late. Now we have a nice bottoming structure. So now you can do the safe play, which is, essentially say, all right, we got the close over here. Very likely if we back test and hold this level again, this 216.66, call it 215 to 216, 215 to 217. So the size of this wick, we'll draw that out as well. We can look for a back test there to get involved if we're not already. And assuming this holds, we just target, like I said, that 230 first. If you buy time, you can also target a sweep of here into the middle of the range, and we can draw that out as well. Let me draw that the other way. Oops. What am I doing here? There we go. So I just want to get the expansion fibs on here as well. There we go. So, and will you look at that? This is not a coincidence that when you draw the 50% fib of the range, it's tied perfectly to the center of our zone here, of our area of interest. This is a very, very natural thing that happened. Basically, this is where the gamma exposure shows a magnet. This is also where the range forms around this magnet. So when it comes back up here, this will be a very logical place for it to either reject and need to come down to make a higher low here, or for it to surge through, back test, and push higher. So I really do like AMD. I think this one's definitely worth watching. And Tyler, yeah, we can definitely look at Microsoft Now, Snow, Nike. We can look at all those. Let me just do GM real quick. We'll move on. But yeah, I love AMD there. GM, insanely strong. Yep, insanely strong. So this is a chart that I can't buy, but I think it probably goes higher. Let me explain why. I think this is a megaphone. Like that. Maybe something like, that looks pretty good. So an expanding pattern after a gap up. These have a lower likelihood of playing out than a flag, a consolidating pattern. So see how these angles are about 20 degrees out. If they were the other way, in, and we saw lower high, higher low, instead of this swing down and swing up and then another swing up, then we would be able to say, okay, probably 70% chance that it goes up, and it probably goes up statistically like 1.6 of this range, something like that. So that would be like right here. With this expanding pattern, the odds change. We are now looking at a lower probability of more like 60%, 65% success. So small, maybe 5 to 10% less likely to play out. But the expected gains are almost double, if I remember correctly. I believe that those on average will make the full measured move of twice the the megaphone range, I should say, as opposed to the 1.6 target. So that would be looking more like 80 or so on GM. I think that that's what we're seeing. But these explosive patterns, they're really tough because, for example, if I saw this sweep here and then start to reject, my mind would go, okay, megaphone pattern. I will be looking for buyers under this low. And it didn't give that to us. It is a sign of strength, but it just didn't give me an entry. So now I can't really enter up at the top of a megaphone, because what if it's not done developing and it needs to come all the way back down and finish that business and sweep both of these? There's no way I can weather a $9, $10 stop on something like this. So this is one that's probably going to just break out and leave me, and I'm okay with that. You can look at the weekly though, because I believe this is a very bullish chart on a high time frame. And this is another reason why I think it's going to keep going. I mean, that's beautiful. It's a massive cup handle and a clean surge breakout into an explosive megaphone pattern. So very likely this is on its way to a full measured move of the entire structure here. And these are like my grand slam type plays. And we'll pull up another one of these in just a sec. Like if this works, you get paid very, very hard to just buy and hold this or pyramid into a position. And again, remember the sell zone that we talk about? Just drag it on across. See, look how perfect that tap is. And it tests up into, again, rejects, and then surges through. And actually, I'm seeing this top wick here. So we can also do this. And see up here where this new demand zone is forming off of that wick. Twice now. So yeah, very, very much think this chart's going to go much higher. The first target would be, first major target would be the 161 extension fib of the left lip of the cup to the base of the cup. See from right there to right here. The 1.6 extension will be 92.75. That looks like a good target. And then the 200 would be maybe 110-ish. So that's an impressive one for sure. Not sure how to play it at this point. Hopefully it comes back and tightens up and we get a valid entry. So let's go into some service now here. I charted this last week, apparently. I think I remembered saying that when you have a line like this and it's trying to bottom above it, it makes me feel like it might be a false bottom and it can push down and tag this line. Not high confidence there in either way. Higher time frame here. Let's go to the monthly. So to me, it looks like one of these charts that's just not quite ready yet. And I'll tell you why. So you see this zone of interest here. See, I do this on almost all my charts right now because a lot of charts are doing the same thing. I always think it's funny when I do the same technique on like 7 different charts on a day, and I go like, am I just being a weirdo? Is this just like my favorite TA thing of the week, my flavor of the week for some reason? And almost always, if I think about it, it's like, no, it's just this is a theme that's appearing in a lot of charts. So it is something that I should be acknowledging and paying attention to. So in this case, it's a lot of these cup, breakout, back tests, and now consolidating in a bigger pattern type plays. In general, here's what I'd say. It's bullish long term, as long as it's over this. Short term, there might be more pain here because basically what it needs to do is it needs to consolidate in this pennant. It could take until into next year for it to make its decision. Oh wait, this is a monthly chart, so that would be a long time. Let's see. Yeah, like February or something. So this one and software in general, we can go to the IGV for the software as a service ETF. I think chips just rebased and they are going to have some good legs here. When chips do strongly, software gets liquidity sucked from it. They will both go up. NVIDIA will go up more than now, I would say. In general, we were looking at the monthly sticks. This is a much weaker monthly stick on IGV. Going to a daily here. So IGV, while the rest of the indices, they smashed above their big red stick, they're trading up here. IGV is still well under it. This is lagging even semiconductors, which were not performing well, but see, they broke above theirs today. So I think semiconductors are next up in line to party, while IGV are going to have subpar returns as they consolidate in this range. Just like now is consolidating in its pennant, I would assume if we zoomed out, this would be doing something relatively similar. Cup, back test, failure, back test again. So I think these are still valid. They're just sloppy charts. It's kind of where I'm at with now and other software. But Microsoft, a little bit different, being a mega cap. Look at that. Hey, Persona YouTube. Glad to have you here. Hope you had a good week. Let's see. For next week, what are your thoughts on NVIDIA levels, gamma exposure hunting, still volatility zone until we climb back up to 180, but log of red bars around 170 to 180? Thoughts? Great question. And since we're talking about semiconductors and software, perfect time to talk about it. Let's do NVIDIA here. And absolutely, I can. We'll add ASTS and main to the list as well. So, interesting weakness today. Wait, what day is it? Okay, it is the 28th. Going crazy. Interesting that we were so weak today. I actually didn't look at NVIDIA intraday. So we saw semiconductors trying to turn up. Really weak price action on NVIDIA. But that's a big bottoming wick. Was there news on NVIDIA? This seems like maybe it was news driven. But regardless, let's zoom out and see what we see on the hourly. And then we'll get into gamma exposure and all that. We're still flirting with whether we are breaking this downtrend or not. Here's what I think is happening, and I think this is bottoming. I know it was an ugly daily candle, but I like the bottom wick. And I like that it found buyers higher than here, 173. So what I think we're seeing is a left shoulder, head, right shoulder being formed. You'll often see when you have a downtrend line like this that's been sloppy, like it tried to break out and failed. That was a really strong breakout attempt that got smashed even stronger. That was the earnings pump and dump. So it needs to reset. And when you have this downtrend line and it's sloppy like this, see it tried again, and then it needed to reset again. It's really got to wash people out of this trade. And it is very effectively, which is why I actually really like it here, because it's washed them out twice now. I mean, arguably 3 times there. There's another try. And now it's starting to form this inverted head and shoulders. And like I said, this happens a lot in these sloppy downtrend line breaks because they need to do this deep back test. If this was like a Palantir or a Rivian on their rallies recently, they did not need to do this look back test like this. They surged up, gapped up pre-market, came back to the level that they were consolidating at the previous day and just surged on up out of that downtrend line. This one, more positioning that needs to be washed out. It's just a more choppier name here, I would say. So we're hoping to see this progress on Monday and Tuesday. I would expect one more bottom wick. Maybe it holds 175, or maybe it undercuts to get 175. Maybe it holds 176 or something. But in general, we're looking for a day or two of chop where we can look to get long on swing lows and hope that they are forming a right shoulder here, I would say. Definitely buy time if you're doing options, and make sure you're buying dips that have bottomed successfully, as in, wait for price to come down, wash out in a sharp high volume push, pop up a little bit, come down, and then push up on volume at a higher low. So, you got that double bottom that we always talk about for a base. So for example, we had this bottom and this bottom. A lot of people were thinking that the bottom is in, and I agree with them. That being said, you have a lower low here. These 2 points do not constitute a valid bottoming process yet. They would have to completely flip the bias of lower high, lower low downtrend by smashing up and securing a higher high over here. Since they tried and failed, see, this was algorithmic. We're going to zoom in here to show you. This is all if then, it's like a coding looping, like loops or something, where it's like, okay, if we wash out liquidity under here and we can close above the neckline of the dump, well, then we open the door for the next test higher. We will test up into this cluster and see what we do. So we surge up. If we're able to close a candle above this, or at the very least swing above it to confirm a swing high, then we are opening the door for a valid bottoming process. We tried, we failed. So now we have to retest this dealer cluster down here. So we come back down, we retest it, and we found buyers. So I would expect path of least resistance to be to attempt to come up here again. You can try to bottom fish and assume that this is a higher low shoulder. I might do that. I don't know if it's the best move. Maybe the best move is to wait for this to engulf and back test. So a break of structure bullish. For now, we do not have a bullish break of structure. We have consolidation in a likely bottoming range. But if we're wrong, this could slide pretty hard. That is what I'm thinking for the NVIDIA. Let's look at the GEX profile though. So let's see. I believe this should have access to it. We'll find out. So we're going to do gamma exposure for into the end of the year first, and then we'll also do for the week. And that should give us a good ballpark about what our targets are and what the timeframes are for them. So, oh yeah, first of the month. It's the next trading day. Nice and clean. I'll give it a few seconds to load. We'll check back in on that. In general, based on the chart, what I would expect to see, and we will confirm or deny this, when that loads, I would expect to see a dealer cluster. If we're bullish, I would like to see a dealer cluster at 180, but a bigger dealer cluster at 183 to 185, somewhere in there. And that would tell me, okay, there's going to be an incentive to pull us to 80, and then there's going to be an incentive to pull us through that to the higher one. And if we do get that will get the break of structure, we'll get the likely bottoming process, buyers will pile in, then we can enter a buy every dip mode on this stock. I don't think we're quite there, but I do think we're very close. Let's see if that loaded. try bar charts. Bear with me. Well, here's SBX. That's something. I just type NVIDIA gamma. Nope. We'll get there, guys. Thanks for bearing with me. I just want to be able to, or make sure I'm showing free stuff on here, not anything I'm not supposed to be. Here we go. Here we go. Okay. So NVIDIA, gamma exposure by strike. Let's go to expiration dates. This is, let's start with all. Oh, no, they got me. Okay. I thought it was free. Try this once more and then we'll give up. If I can't get this for you right now, feel free to reach out to me on Discord and I'd be happy to shoot you the gamma information, gamma profile information. Because it seems like this ain't going to work for us right now. So yeah, get back to me on that, Persona YouTube. And let's move on down the list here. We're going to talk about ASTS and main. I want to see if I missed anything from Tyler earlier. I think we talked Microsoft a little bit. Snow and Nike. You bought those before they took off. Let's give you your flowers real quick. NKE. Hey, welcome. Rena Penrose. Going well. Hope you're having a good Friday. We are going over some charts here. We are just going over my view of the market, some trades I took, some trades I'd like to take going into next week, some trades these guys took, all that good stuff. So Nike, really nice here. This one's definitely lagging like a lot of the other retails, but to me, it looks like it's carving out a bottom. Got the nice big flush out, got the W pattern forming here. We got the higher low. Inside this higher low, we see on the hourly a nice inverted head and shoulders. A lot of these patterns on, like I said, these stocks that are in a downtrend and they're going to be messy and choppy, but there's probably buyers that it's tapping into here and eventually it will curl up and out of a base. Let's see. How's trading going and what predictions do I have? That's a good question. Trading's going well. This has been a very good week for me. I was red today. This is a good time to talk about what I did today, intraday, and why it didn't really work. So SPY, I was seeing, I had it stuck in my head that we were going to sweep this tomorrow or today on Thanksgiving. I don't know if I was just completely wrong or if momentum got kind of messed up with the futures halt. Like a 12-hour, 11-hour futures halt. I've never seen that in my life. And it's very, very strange. I don't know if that slowed some momentum. Sure didn't seem like it for silver. Regardless, I thought we would sweep this. I had 685 calls for Monday. Bought it about 0.9. At close, they were like 0.75. Right at open, they spiked to 1.3 and I didn't take them. And I felt real dumb because I thought it was a sign that people were rushing into this strike and it was overinflated, but only because we were going to be making a straight shot to my target. I held through some rough hourly candles here and my premiums would not budge. My premiums were 130 at the top of this hourly candle here at the beginning of the day. My premiums were 90 up here. So they were just moving really poorly and I was antsy. So let's go to the 5-minute chart. So thankfully, man, it's so weird having this data here. It's like, this is part of the trading day, but not today. This was the end of the trading day. So I held till the end of the day. So I did get out up here, but the contracts were, they were a 105. I made like 10% or something. It was really unfun. That wasn't why I lost money. I lost money because when we rejected here, I thought that I needed hedges to protect my long swings. So I grabbed some hedges, some 0DTs, did not monetize them here. I was waiting for this gap to be filled. It snapped up with such ferocity that I just said, okay, I'm wrong. I'm closing them. I took a decent haircut on those. Then when we rejected here, I again thought that maybe we were going to go for the gap fill then, and I tried again and immediately got stopped out. Well, not immediately, but I got stopped out on a break above here. So a little bit red for me. My swings should make up for it come Monday, down about 3% in the gamble options account. So not too bad, all considered. It's up 30% this week. We take that. So, sorry, Arena. Just saw these. You want to challenge me? I'm up for a challenge. All right, let's see what this challenge is. Would you do a giveaway if I can reach over 100 followers goal in the next hour? I gotta plan if I'm doing a giveaway. I'm just the pretty face for this lovely company, so I cannot commit to any giveaways here. But I will. Let's see. I will think about some things that I might be able to do. But good to have you in here either way. Michael Anthony, good to see you here as well. I am going to put a pin in any Thanksgiving giveaway because there's nothing for me personally to give away here. What I can do is give away some free alpha here. That's what we're doing today. So where were we? Let's see. I think there was a ticker I wanted to check out. ASTS in Maine. Let's do that. Those look like they're going to give us some good insight on what's going on in those sectors. I know ASTS is space. I forget what Maine is. Is that financials, fintech, or something? Is that like insurance? All right. ASTS on the 5, looking interesting. Let's zoom out though and start where we need to do this right. So again, a lot of these patterns, guys. Massive base, breakout, back test. Now it's trying to retest the breakout. Here's how I would draw this one. I would look for areas of major interest. So the first one obviously is here. This one has been tapped out. Very, very clean. If you got long here, this was when I was recommending if you like the name to get long. I didn't. I'm kicking myself. It would have been a 3-bagger very rapidly. I know a few people in our community did though. So shout out MP Tosca. You guys crushed this. And Little Buddy, you guys both crushed this trade. So that was clean off here. So now we do the same thing though. If we miss a trade, so what? Usually another one's going to set up. So we have this swing high. We have this swing high. This creates a little zone of interest. And we're going to refine this. But you can see the interplay here. So I would even pull it a little bit down just to the body of this candle. So this is the body where it first came up. Then when that body rejected, see straight red candle. Then when this popped through, big surge. Same thing here. This body was red. When we lost that, straight down. So that's the kind of area of interest that I'm seeing here. And when you draw it over, lo and behold, it coincides almost perfectly with this big red stick. So this big red stick was saying, all right, we need to hard confirm that this gap is going, or that this zone is real. So we came back down and filled this little imbalance to the top of the breakout, but no, we need to slam it down and fill, I'll zoom in, this really key imbalance. This one right here. And see, that's precision technicals. You guys see how it filled that? We'll zoom in even more. This wick down comes exactly to the top of this gap candle. So this means that the entire breakout has now been validated from the standpoint that it's been back tested completely. It will be a back test, a successful back test, if we can close candles over this, just like all the other big red candles we were talking about, the reclaim and the push higher. So that's what we're looking at here. This is on my focus list now. Thank you for putting this on my radar, because the potential gains on these are explosive. You see, we have a big, sharp, descending, falling wedge. And if we zoom out to a really high time frame, this chart doesn't look done to me. Well, you know, I don't know, actually. When I say that and I see this, I don't know what to make of this. But the analysis I gave prior, I think, is still valid. The monthly is not the prettiest thing in the world, but besides that, I think this thing still can rip like crazy. All right. Oh yeah, I know ASTS very well. I'm very familiar with this one because I missed it at $4, but I did trade it like I caught one of these legs. I think I caught from like 13 to like 15, 13 to 20 sounds right. Yeah. And then I sold and I was like, I'm great at this. And I looked a couple weeks later and it was like another triple or something. Okay. Wow. You believe it'll fall to 40. Let me look at what might get us there. So I'm definitely not saying you're wrong. I would say it's possible we reject before here, and then 40 would make sense because that would be doing the same thing with, see, we have a few more imbalances. There's one imbalance here that could get filled, and there's one down here. And remember, when you have a stock with fundamental narrative changes where the street can get caught very flat-footed, and you can run a name from $4 to $40 in 3 months, that will create a lot of imbalances, most of which will be filled, but not all of which will be filled. And this is a great example here. This company would have to have catastrophic news for it to trade back at $5.66, let alone $3. But there are still gaps there, you know? So we can't get too married to the idea that all gaps will fill or that any one gap in particular will fill. That being said, totally valid for your target. If we get down there, I'm a buyer. That's for sure. If we get down there, I'm a buyer. You could argue that what we're seeing is a complex head and shoulders. And I would draw that. We'll repurpose the zone here. I would draw that something like this, with this being the left shoulder, this being the head, obviously. And we might get a push up, maybe to 65. Actually, it should be lower than this shoulder. So that would mean that we would be capped by this, 61. So maybe we hit 60 and reject. 60 and reject, and then we have to push down to that 40 would be valid. And then it would look like a rebasing. See where this is kind of curling here? And you just trace it all the way around. And you would expect a big cup to kind of form like that. And here's another example where it's trailing down, but it's kind of starting to cup. And then it surges, but comes back, holds the breakout, and then kind of curls back up to form this big cup base. And it's messy with this, but still valid, I think. All right. What else we got going on? Let's talk about Maine. That was your other ticker there. Yeah, absolutely. Thank you for bringing the tickers here. Every time you do, good stuff. I think we've had some actionable plays off some of the stuff you brought here too. So yeah, good stuff. You're looking in the right places, I think. I like the stuff you're bringing to the table here. So this is interesting. We've got the peekaboo there. We like that. This is pretty solid structure for a base. I don't love the lower bottom on the second one, but it's so brief and such a strong response from it that it's good enough in my book for a clean double bottom. You can also look at the characteristics of the individual stock and see that it kind of likes to do this. Like this little zone here, it's a mean double bottom with a sharp push up. Mean double bottom, sharp push up. I think this is good. We will know it if it can sweep over here. 59, 58, call it 60. You could look for maybe a entry off of this imbalance, this immediate one, 57.82. You could also look for this imbalance, 57.21, and you'd just be looking for kind of a back test of this trend line. Your stop would be under here. For a swing. For day trades, obviously, do whatever your system tells you. Usually, don't let a candle engulf and lose the previous day's low. You might get dragged, yada, yada, yada. But I figure for most of these, you're probably talking swing trades, because why bother with day trading something low liquidity unless you really believe in it, I guess. What am I looking at here? What do I feel about this? This is a kind of chart that's kind of hard for me to read, to be honest. I think how I should be reading it is that it is in price discovery mode to some extent. On a high time frame, it's in price discovery mode. So once it broke over this zone, back tested, just very strong, pushing up in range expansion. This is a potential death stick. That's the thing. In a vacuum, price action from here to where we are, this is a very gnarly bear flag. Because this consolidation is at the bottom of this stick, makes me a little worried that this push below was kind of a hint that we are going to break lower, as opposed to we got liquidity, now we're going to go up. What it might be is that we got liquidity, we're going to go up, sweep this high and dip into this, and then puke even harder. And you could look at that like a kind of expanding megaphone, an inverted megaphone, where it comes up, sweeps that, gets all the bearish stops out, then goes down. I don't have a strong opinion either way. That's just kind of how I feel looking at this first off. I also see the potential for a head and shoulders here. That would also align with this thesis of a pop back into this imbalance and then a rejection. So I don't think that I'm a buyer here unless it closes a weekly candle over here. And like even then, it's just like not a chart that I like, just because of this newly opened imbalance and consolidation from here, where usually I'd be saying, hey, if we sweep the middle part of the base, then probably it's going to come up to test this area of interest where it sold off from. But with all the other context that we gathered, I think it's possible that it just wants to visit up here before seeking liquidity lower. So I'd have to look at the fundamentals to kind of color my opinion a little tighter than that. Your main stock for dividends. Okay. Just afraid if you look at the volume, it's not high. So if anyone, if they sell a lot, it could, could be a falling knife. No, I would agree with that analysis. I mean, if it's a dividend king, and I don't think you should panic sell or anything. I would just keep an eye on how it develops, and especially what it does when it sweeps over here in 60. You'd really like to see it sweep over 60 and then kind of chop sideways for a little bit and correct via time. Or if it needs to correct via price, not too deep, maybe just back into 650, 750 or something. I'd just be watching price action in this zone to make sure that it's not a hard rejection. Because if it's a dividend stock, you might just say, hey, I'll step out and I'll get it cheaper. If you're, you got to be, or you can't be as scared about falling knives if it's a dividend thing that you plan on holding for 5+ years anyway. So definitely a little bit out of my wheelhouse. I'm not a dividends trader. I don't have enough money to be. Someday I'll join you, but not quite yet. I'm going to pull up my watch list too and see what else is cracking. Have we talked SoFi yet? I don't think we have. Let's do that real quick. And thank you, by the way, guys. We still have 50 viewers. That's not too shabby considering this is a weird time. It's been a long time since the market closed. It's a Friday, all that. So if you're here, I appreciate you. Feel free to drop any questions. I'd be more than happy to look over any charts you'd like. And we're going to keep on going here for a little bit. Yeah, we're just over an hour. We'll say hard out in half an hour. And we'll see how it goes. So we have Soundhound. Let's check out Soundhound. Tyler says he booked the shares and went into calls. Got to risk it for the biscuit. Let's see what we see. So tough up, tough rejection. Where did we come back to? Pretty close. Okay. So whenever you have a parabolic move, like from 2 to 8, and then it rejects hard, but it ends up being the midpoint in a larger base. See what I'm talking about? That's a very important level. We mark that out. So after the big parabolic move, we come back. We had some buyers here, but this is where the buyers kind of start. They undercut, they reclaim. This becomes a new base. They try to push higher. If they had secured this, we could have seen a squeeze. They could not secure that. I mean, this is already a squeeze, don't get me wrong. We could have seen like a double in the stock. We did not. The sellers up here step back in, retransacted. We can go to the daily and kind of hone in on where they're hiding. Where are those sellers hiding? Let's find them. First thing that I see that jumps out. So the idea is that we were looking at the weekly. I want to identify where in this range are the breakpoints. Where are the specific levels of rejection? So what I see is push up, tried to push up, tried to reject, but then pushed up again. Pushed up again. That's the high. And then this rejects. And then two big wicks. So I see two levels. One is here. Well, actually, we'll draw a zone instead. So we see this is the top of the level. Oops. See, this is the top of the level. We've got 1, 2, 3 there. And also see the wick up here. So this was an area of selling that got backed off by this. But then when we came back and the sellers popped again, this was the area where they stepped back in. So I would draw that as the top line and the bottom line. Something like that. Maybe right there. If we draw that out, it should tag there. So that makes sense. So the same seller that sold us here, started the big downtrend, he did sell us there again. And he is filthy rich off of these two trades. And of course, I'm oversimplifying, I'm personifying. Doesn't mean it's the same dude. Doesn't mean it's the same institution. There's a decent chance it is, but it could be somebody saying, hey, last time we saw somebody big sell here. I bet we can do the same thing here. Could be something like that. No, not too many at all. I wanted to look at Palantir and you anyway, and actually, yeah, SOUN as well. So that's perfect. We'll check out all of those. So this is the first level. The second one is more of a breakpoint pivot here. Just seeing a lot of candle opens and closes and like wicks in this kind of zone. And yeah, it makes sense that this kind of forms the topping breaker block or topping order block here, where it surged above and rejected. And then it tried again there, failed. It also tried before and failed. So level of interest there. And it makes sense. There you go. It's 20. It's $20. So it's a psychological level to some degree, but there's interplay. What I would say is you can probably, I like the leverage. So we puked it all the way to fill this gap. There's no real gaps that need filling down till 825. When you're talking like a 30% drawdown and the market is overall bullish, very unlikely we get that. When we're up here and the market is just starting to fall off being incredibly bullish, that's when you can get those big slides. In terms of a path of least resistance type thing, just like path of least resistance was to drag it all the way up here, then it could move down that much. I think path of least resistance is probably up at least to the midway point of this range. So we can draw that with our fib and do dandy Fibonacci's. And actually, we're going to do two things. First, we're going to measure where we are in the context of this range. So I would imagine if we do this, yep, perfect. So this is the golden pocket retrace strategy. This is great on high volatility names. The idea is that once a range is set, so here's the bottom, here's the top, then we can expect the optimal place to buy, if we expect the price to go higher than this established range, is going to be between the 6.2 fib and the 7.8 fib. This creates what's called the golden pocket. So in between here, in between here and here, and you can see just precision technicals here. We come into the golden pocket, we immediately find buyers. We try to break over the 6.2 fib, it says no. We come down and we do not break the 7.8 or the 7.6 fib here. Very, very clean. So I think this is a buy. I think that once you sweep this 13, 12, or 22, it becomes a easier hold, and then your target will be the 50% of this new range once the bottom has been confirmed, like we mentioned. 50% of this new range, about $16, and you see a little imbalance there as well. So that's the logical target for me. I would also say 15 because 6.2 fib and it's 15. Excuse me. So yeah, I like SOUN. It's going to be tricky. I think it's bottoming. What this bottoming process reminds me of is Rivian, actually, where this is an ugly candle, but this is a really nice one, and then it's holding in the middle of the range. And then for me, on Rivian, I was waiting for like a higher low, but it just said, nope, we're going. So we'll look at Rivian and kind of as a comparison. And that'll give me a chance to show you the high time frame look on Rivian too, just because I'm so darn bullish on it. Yeah, so see this, it's in the basing process about 3 days in, tries to break out, fails, then needs to swipe low. but then it didn't need to come back here again. I was trying to place an order at 1450, never got filled on this day or this day, and I had to chase. Totally fine because, you know, it was ready, so it was the right time to get involved. It wasn't actually a chase, but something to consider when we look at charts like this. I think probably we do get this ramp up in SOUN, so I'll be keeping an eye on that one as well. Good call there. And let's talk. We're going to go into some of these guys here. Let's start Palantir. So this is kind of the leader for software as a service. Has been for a long time. That hasn't changed yet. The fact that it's still holding up makes me think that maybe it can carve out some momentum for the sector as a whole. That'd be really nice. But in general, we've got a pretty straightforward pattern here. This is bullish. We have crazy gap up, crazy rejection. This starts the freeze timer. You know, it's no longer a parabolic stock at this moment. First, it needs to base. So based for this long, surged back up to previous all-time highs, based, tried a parabolic breakout again. This one got beaten down, but where did it get beaten down to? This first basing, and now it put in a higher low. This is a very nice stick. It's got a flag here. Could draw another line down there. And in fact, we will, because I want to show you that this was a really nice catch. So we draw our price channel from the top ones there. Come on. What am I doing? All right, pretty close. So it actually didn't even need to tag this, which is just another sign of strength. And that is because horizontal levels take precedence. It tagged this by just about a penny and said, we're done. So I like Palantir. But again, with all of these, we could see some chopping, some shake and bake here. Until it gets above this, it hasn't confirmed bullish. Definitely looks bullish to me, but it hasn't confirmed uptrend, I should say, because it is still in a higher or a lower high, lower low pattern here. So ever since here, this one broke below here, lower low. This one didn't break above here, so it's a lower high, lower low, lower high, lower low. If we rejected here, it would be a lower high. I think we get the tick though. So we can look for Palantir 175 calls might be on the table, especially if we get a little bit of pullback on Monday or Tuesday to maybe 165. I'll have to check a gamma profile for these, but it's kind of what I'm thinking. I like this. And I like looking at these laggard names as we start to see wide participation, because the whole idea with the Zweig breath thrust, throwing my vape around. The whole idea with the Zweig breath thrust, or the Whaley breadth thrust. They're both indicators that essentially talk about when stocks go from primarily in a state of decline to very quickly primarily a state of advancement. So I believe the break point is in the past 10 days. If stocks have gone from 40% declining to 60% going up, that's a Whaley breadth thrust. And it's happened 13 times since it was invented in the 60s, and it's been good for an average of 25% gains on SPY 6 months out from the indicator. So we haven't gotten it yet, but we're very close. We're watching that. And then the Whaley is, I believe, similar, but for 5 days looking back. And the gist is that when you get both of those, that's only happened a few times, and it was good for like a 30% return in the next 6 months. So no matter which way you cut it, we are on the precipice of a really significant breakout here. If we do get that, then these are the names that are going to move the best. The NVIDIAs, the Palantirs, the ones that are beaten down and still in this first kind of bottoming range here. So the idea is that if we get what we're expecting, Palantir will be a $250 stock or something, double whatever this is from 150 to 200. Yeah, like roughly 250 or something. So you're getting a really nice discount here. Whereas if you are buying, what's overextended right now? Google, the GOOG. Yeah, the Guggenheim, that's overextended. I still am a bull. I'm still holding half of my position, but I don't think the returns on Google will be as good as on Amazon or Microsoft. So I am taking profit and putting it in some other mega caps. I have a little bit of Microsoft. I have a little bit of Amazon now. I think we talked about this one. Like long term, I still like Google's chart better, but short term, I think this one has more room to move. Tyler mentioning snow, saying that will move good as well. Let's check that out. I'm a fan of snow. I have Stockholm syndrome though. It's hurt me multiple times. That's not a stock that I've traded very well. But man, when it works so well. You get the clean move and it just feels like, oof, oh baby. I like that chart a lot. It looks like, it looks really good. Reminds me a little bit of Zoom. Very different names, but similar 2021 darlings. And that is something we can look for as positioning changes into the next year. We can look for unloved sectors this year to start coming back into play, unloved names. So when you have a name that has really not done all that much in the past couple of years, you could take a peek and see if it might be ready to do a big thing like this. So I would say this is a Wyckoff bottom. This is a stage 1 base. This is the top of the base that we drew out. And obviously the bottom's there. We see the W pattern, the middle point, and then the push up to confirm it. Now we are seeing what's referred to as a sign of strength, which is consolidation at the top of the stage 1 base. This is what we saw in Intel at 25. Top of this base. Other guys up here, but regardless, a lot of relative strength here. So yeah, snow looking pretty darn good. Let's look for a specific level where we can get involved. I see an imbalance between this candle top, this candle bottom, a little zone in there. Aligns with the bottom of this candle at 245, 245.50, let's call it. That would be an area of interest, that little pocket. I would like to see it dip there, and then you look for a buyer. Once you see that buyer, you can get involved somewhere in this dip, and you can expect it to surge above this, and then probably pull back a little bit, but you're taking profit up here or up here. So regardless, there's going to be chances to get in. There's going to be chances to trade around a core position on this too as well. So I would keep it on your list. I like it. And we can draw rough little downtrend line there, but something like that. Maybe we move it to cover some of these wicks. Regardless, however way you slice it, looks like it's cooking a downtrend line. Again, another one with a potential inverted head and shoulders into previous support. I like it. All right. Tyler buying the dip at Palantir at 155. Beautiful. We're talking fundamentals of Palantir. I'm not an expert. They seem pretty evil. That's pretty bullish. I would not bet against Peter Thiel. So, or Alex Karp. Really any of them. Just you guys see Alex Karp swinging around that anime sword in front of those chicks. That's pretty dope. It's our guy, huh? Oh my goodness. D-Dog, yeah, D-Dog looking good. It had a pretty big pullback. Like you said, it filled the gap. I actually like MDB more here. I only checked a few days ago, so maybe it's changed. We'll take a look at both of those. All I know is as long as Alex Karp is swinging that katana around and waking up every day with, another chance to sell his shares at a 20% return, I think probably he's going to be in a pretty good place, and probably the company's going to be in a pretty good place. I don't know. Sometimes I wonder about the people we have as billionaires. They're all kind of nerds. That's fine. I guess maybe you just need to be a nerd, but there's like cool nerds and there's like Mark Zuckerberg and Alex Karps. Those guys are not cool. Sorry. Okay. We're getting off track. I'm getting sleepy. What else do you guys want to talk about? Anything else here? Let's call it maybe 5-10 minutes before we wrap up. Checking my watch list here, see if there's anything I'm forgetting about. We talked about gold, silver, the indices, talked about Bitcoin, we talked about retail names, talked about mega caps. I think we covered some good ground here. Checking my watch list to see if I missed anything. We can talk about ONDS and SoFi. I don't think we've mentioned those. And yeah, start getting those tickers in if you want me to check them out. SoFi, this is one that I am in on. What a beautiful hammer candle. You can't even see it, but it closed up here. Absolutely gorgeous. I was hoping it would dip more. Thought we'd get 27 and I was going to add. But my runner's up. How much? 87%. Not too bad. So that's a 32 strike call for December 26th. I'm going to let that cook. On a higher time frame, this one is putting in a real nice save stick on the weekly. So what I see is a potential rebasing here. I don't love the lower low, but it was a crazy week. A lot of things have that just because it was so violent. The important part is that it just said, see you later. We're not going back there for a while, hopefully. So I think now the path of least resistance is a liquidity draw up to sweep these two relative equal highs and probably push a whole lot higher, because if we zoom out on a monthly, this is a bullish chart. It's trying to Palantir. And the chart Palantirs when it breaks the left side of its cup, consolidates upwards for 3 to 6 months, and then just yeets up into the atmosphere. Give me 50 next year on SoFi. Give me 60, to be honest. All right, we'll be serious. What's our serious target? Serious target for serious guys. We take the left side of the cup. We take the bottom of the cup. SoFi has hit the 161 extension. A 2 measured move. I don't know why I don't have it on this fib. I'm sure I can add it. From 4 to 22. Should be about 40. Call it 40. So that should be our 2 measured move. That's the next big target for me. You might think that seems pretty far away, but hey, we were at 24 a few days ago, and these names move big. So I'm staying the course on this. I'm going to keep on rolling up and out as they go in the money. Hopefully they will. And that's where it's at. Yeah, Tyler wants more Amazon. I'm with you. I wanted a pullback. They didn't give it to me. I'm sad. We can look at ONDS. I'm still in this one. This one beat me up today as well, but I'm not too worried. ONDS. So again, you guys, you might have noticed by now, I have a type. Here's another chart that looks really similar to SoFi, right? I want to be in these names that have a potential to just scream up the right wall in 3-4 bag in a year or two. So I really like this one. Why I like it so much is because, well, first off, when a name goes from $1 to $11 fast, you know that it's been mispriced. In both directions, to be fair, it was mispriced up here, and it was 90% retail, and institutions shorted the hell out of it to a 50% retrace. And now it is up to, I believe, about 60% institutional interest or institutional holding. So the big boys got in, and we were talking about this in the Discord too when it was up here. We had some guys in. I was not in, and I said, hey, you better be free rolling over 10, brother, because if institutes aren't catching your back on this, this is not going to keep going straight up. It's going to need a big old pullback, and that's when you should be getting involved. So some people sold, some people didn't. Some people were buying down here, though, and that's good. Regardless, I think that long-term, this is going higher. I think that on the weekly, we have the potential for an absolute monster push up here. Even just to new all-time highs is 30-40%. And then you think about where we actually would be going if this big pattern does play out. I'll show you. We would be talking about 1550 being the first big target, and just under 20. Call it 20 for the measured move double base. So I am in this one. I'm in December calls. I forget the exact date. I think they're pretty soon. They're like 12/12. So I'm going to sell them next week. They are 8.5 strike. I was in the money. Now I'm not in the money. It's okay. I believe we get the move over 9. I believe that we get the move into this next fib at 911, and it will fill up to this level here, and that's 920-ish. That's where I will gracefully exit this one and hopefully roll up if they give me a look. I think we probably get 10 by end of year. Anything else on my radar? Oh, home builders. Guys, have we talked about home builders? This is a slam dunk. This is a buy shares and forget and thank me later. Not financial advice. XHB, this is looking so good to me. It's looking real good to me. Cup, big extended handle, shook everybody out extensively with all the speculative housing stuff. Nice clean channel break. Could come down, back test somewhere around here. This looks really strong though. I don't think it back tests super deep. Lots of flow. Bullish flow, that is. I think this one has serious legs. Nice Elliott waves here. You get 1, 2, 3, 4, 5. Then 1, 2, 3 correction. Now in theory, could be starting a 1, 2, 3, 4, 5 type move into the next year, where we could see it end up being like 50% higher at the end of the year. I think this one is very bullish. I also see another inverted head and shoulders here. So I'm playing with KBH. KB Homes. This one's really pretty to me. Getting real close. Give them another one here. Getting tight. I see this on the weekly as a tighter, more constructive cup and handle than on the index. I think this one's leading the index. So this is where I want to be. Could also look at TOL. TOL also looks very good. Very similar. Cup, meet handle, meet downtrend line, go boom. That's what I'm seeing. Oh yeah, we're going to look at U and ASAN. I really like U. I saw flow on 45 calls for next week. See how they did today. Looks like they closed the week really strong. I was considering buying yesterday. Wonder if that's all they give us. I'd like one more down day, but this might be enough. I'm really bullish on you. Just flirting with the flag break. I would love just a little pullback. I'd love 1 to 40. I don't think I get it, but seems very constructive. It seems like this is a double bottom. And high time frame, this thing's amazing looking. These are my favorite looking stocks. So we talked about another one like this. Who was it? Now I'm forgetting the one that was breaking a neckline. I'll have to look back. But U gets added to the list. Once it breaks over this, we'll draw out the neckline. Roughly that is kind of the magnet, the pin. And we want to see this transact. Can also give it one of these guys, and I bet it's back testing or close. It doesn't even need to. There was the back test and then flagging over it. Yeah, so in general, these names I believe are going to be doubles in a year. This is what I said about Hood and Palantir and what else? Other stage 2 breakouts. Intel, there's another one from this year. I have a pretty good track record with these. Air, there's another one. I think these are on the menu. So when this pushes, it can squeeze very fast to 50 and even 58. One more chart like this. Back to Rivian. This is potentially my favorite chart long-term in the entire market. By 20 leaps or something. And be very happy when it's trading at 30 in a year. That's what I think. All right, guys. We have hit my hard out here. I am going to wrap it up here. This was fun. We got some really good insight on a whole kind of smattering of different stuff going on in the markets. You got stuff going on all over the place. Lots of sectors popping up. Lots of action. Every new day, there's new setups. So we're going to keep on keeping on, keep playing what we see. We're going to be buying a lot of Rivian because, man, what a base. Just such a series of higher lows and lower highs that's now broken. Now we have a higher high. This is all a powder keg. I would love to see 25 by end of year. That's very, very aggressive, but hey, maybe that's what Santa will bring me. Okay, guys, I'm going to wrap it up here. Thank you so much for joining me. I'm Steve. If you like this analysis, you can find me on Twitter at Steve Teilman, STEVE You can find my free Discord there as well. We have a lot of great people, a lot of great free discourse, also a paid section. Check out the features on the Discord if you're interested. Also check out Trade the Pool. They have an amazing Black Friday deal still going, I believe, for 15% off, and an amazing community as well. Lots of live trades going on there every day, and our good friend Joe in there as well, moderating and doing lots of good stuff. So thank you so much. I appreciate your time. Have a great weekend, and I hope you had a great holiday. I hope you have great holidays going forward. I need a nap. I'm going to get out of here. Have a great week, guys. Take care.